There are two forces acting here, Sri. One, he is intending to have a big discussion among all the different countries, have the disputes come out in public. And from that point of view, when April 2nd comes forth, it might make full sense to him to say, I'm now postponing that date to April 30th, and from April 2nd to April 30th, we are going to keep talking. That's one part of it. But on the other hand, if he does it again, the stock market is going to take one more hit because the uncertainty continues. The real question is, when does he completely buckle down and decide that this is not the way to go? And I think we are reaching, this is what your viewers ought to be aware of. Rather than say that you are looking for the US dominating the situation, despite the size and economic importance of the country, the size of the gross domestic product, the policies are essentially weakening us significantly with respect to the rest of the world, and they might have the upper hand by April 2nd.
Sri, back to the data, CPI this Wednesday, is that something of a sideshow? Is it going to be overwhelmed by the tariff to and fro and the headlines, or could it potentially change the narrative for the Fed that seems to be facing pressure from both sides of the room? Tariffs could be inflationary, and the market seems to be pricing in a tariff-induced growth scare. What the market really needs to get back onto more of an equilibrium is signalling that there are going to be 2, if not 3, rate cuts from the Fed this year. Are they going to signal that in the survey economic projections in about a week's time?
There are 2 or 3 parts to your great question, so let me go one by one. The CPI figure is still going to be very important when it comes out. The reason is that inflation is remaining above target. We are going to see that continuing to happen. The reason for that is the 1 percentage point cut in interest rates that the Fed implemented between September and December of last year, including a single 50 basis point reduction in September, which in my opinion was totally unwarranted. You put more money into the pockets of consumers, they were spending more, and then until the consumer sentiment changed because of tariffs. So that is one part of it. Second part, as you look forward, whether the Fed cuts once, twice, 3 times depends upon what Jerome Powell wants to do along with his colleagues. In my mind, they have become cheerleaders for the stock market. There is a Powell put that exists, that if the market falls enough, Powell will change his mind and then give you a rate cut. That's not part of the Fed mandate, but that's the way the Fed has operated going back to 2008. The stock market is much more important than overall economic growth or inflation or employment.